Today we're going to talk about Forex deja vu. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. No, we are not going to be talking about a Crosby, Stills, Nash & Young album. We're going to be talking about Forex deja vu. Deja vu is a French term for already seen. And yesterday was a textbook day for selling high setups on the British pound crosses. And also, it was a textbook stop hunt after the BOE back right up into the trades that sold high. A few weeks ago we did a video on my favorite type 3M setups, and we also did a video on my favorite selling high setup, which coincide together. But those two videos were replicas of what happened yesterday in the market. And so today we're going to talk about our basic system, but we're going to just break things down a little bit more. We're going to deconstruct how those setups can start to be easily identifiable. A lot of traders emailed me yesterday and told me that they saw those setups, pound Canadian, pound Aussie, pound New Zealand, but also the stop hunts back up at the timings. It was a textbook day, and that's what's important to remember, is that you're not going to the screen every day trying to catch a move and trying to jump in and catch the pips. It's about stepping back, and there's two sides to the coin. Obviously the strategy side, and then the mastery side of your approach to the market. Yesterday we went over a daily routine that I work on myself each day, because I recognize most of the mistakes that I make, even on easy trading days, whereas of my own result from not being properly prepared, not being emotionally orientated when I went to the screen, and not also having a really simple plan of looking for one or two of my best playbook setups, whether that was a buy low setup, a sell high setup, or a trend trading setup. And that's why it's really important just to relax, because there's going to be the same opportunities day after day after day. And so what you don't want to do is get whipsawed on poor quality trades, trading all the time, over trading, making great trades, and then throwing it all away on a garbage trade because you over leveraged, you were overconfident. You know, all the little things that just keep coming back to haunt us, but only each one of us as individuals know where our triggers are, where our potholes are, you know, whether it's our routine, our screen time, our elation, depression with how we handle the ups and downs of the trading journey. And, you know, again, we talk about, even with a simple system, how there's a layer upon a layer upon a layer, because every time you progress, the market will unveil new obstacles in your path, whether they're market related or personality related. So again, let's just go back and review our simple system. We talk about structure, we talk about buy setups, sell setups, trend setups, and of course nothing at all. You know, a few people have asked me to relate to them about it, you know, I guess explaining what I see in the trade setup, relating to them in live time, but I don't know what that's going to be. The market is constantly evolving. As it evolves, I have an idea, or I can form a thesis or a narrative about what I'm looking for on that particular day. And in often cases, I may not see anything that looks ideal, and within an hour that can completely change. But that again just comes back to having a big picture perspective. Yesterday's high, yesterday's low. Now, if that changes because there's a session high that's lower than the previous day's high, and we have the previous day's low, then my high and low are wherever that geometry forms as we head into our next day. If they break that, and again we talked about the three things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse. They break out, they pull back, or they stay range bound in a trading range. And so no matter what geometrical structure I'm looking at, I'm always thinking of those three things. Is this just in a trading range? And the easiest way in most cases to identify that is by the numbers. Most of these instruments are trading either inside of a 25 pip box or a 50 pip box. On the odd occasion they'll have gone outside of that, but now we have a whole different trade narrative. If they go beyond 50 pips, I'm just waiting for that market to go into consolidation, because as we saw yesterday, they will come back and stop out traders who are already in profit. Nobody gets a free lunch. That's the one thing to remember. Nobody gets a free lunch. So if you can identify profitable trades within that session that are within a 50 to 75 pip target, and I'm not talking about a trend day, a double distribution day, not talking about those days. I'm talking about a market that's broken out and gone into consolidation. The moves will come out of consolidations. So then we talk about the timings. Just to reiterate, 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. Now, that is the main window that you can really narrow your focus on. Yes, stop hunts can occur prior to that window. The trade can occur in the hour after that window. But that allows us to narrow our time down to the equity opens. In a large majority of the cases, the moves will come in that middle hour, either for the stop hunt or the trend, after they've already hit the high or the low in that first hour. In some cases, we'll get the 7 o'clock stop hunt, which is the hour prior, where they were hit the low or hit the high, shift the volume in that first hour as a trap, and then trend it in that second hour, or continue the move in that second hour for the measured move of 50 or more pips. So the round numbers often give us an area where we can identify a level to enter at in price. The other day I talked about placing a limit order. Once my narrative or my thesis has been confirmed, or they've hit the stops and they've made that engulfment or pin hammer for the trend or the reversal, I will place my order into the market either for a best fill price, meaning if it's not at numbers, I'll put it for the best fill with the spread included, so that I can hopefully get a better price, or I will enter it in at numbers so that I get filled at the numbers. And the reason why that is that gives me peace of mind that if they've cleared out a quarter level on a stop hunt or a reversal, and I'm confident that for my trade that they may not be going back in that area, my 20 to 25 pip stop loss is a maximum amount that I should lose on this trade if I am correct. That allows me to control my risk. That allows me to set my profit target now, either based on numbers or for the high and the low extreme that market may test. And the other thing with that is that if it's a buy on the profit target, meaning that I've sold it down, I will often put the target plus the spread if I'm leery that the market may just hit that number level and pull away and not go through it. So I'll put that for the number plus the spread, give or take a couple of pips, depending on the pair. I've learned the hard way not to be greedy, and I've also learned the hard way to learn how to take a profit, which I think is critical in this market. As you may have found out the hard way as well, like yesterday's a great example. Some traders were up 100 pips in some of those pairs, and in 2 and 3 candles, when the BOE came out, they came back and stop hunted traders who hadn't taken money off the table, or who may have been sitting at break even, thinking that there was going to be a measured move. But as I said earlier, nobody gets a free lunch. Some traders traded the trade and the stop hunt back into the trade, saw the setup off the low of the day, which again, we're going to review those textbook setups because they did the same thing a few weeks ago, and they're going to continue to do the same things. Another few emails about whether or not the market makers, the smart money, the banks, too many people will catch on. I would never worry about that. As you know, even if you start to get proficient and consistent, the next challenge is to get to size, and there's nothing that they can do differently. There's always going to be a high and a low. There's always going to be timings. There's always going to be round numbers. And the way that they make money is by trapping traders and shifting the market. That is the only way they can make money. So, without blowing the world economy apart. So don't panic. master your craft, keep it simple, pick a couple of setups, master them, learn how to spot them in live time. And that's what we're going to talk about, is the process itself is working backwards, deconstructing things so that you can have a step-by-step process in your mind with your self-talk, with your process each and every day about going to the screen and understanding in that hourly rotation how that works like clockwork. 3 pushes, hit the stops, shift the market, trap volume and shift the market, and trend it. Once they've trended it, hit the stops on the other side. They trap more volume and either continue the trend, or they reverse it and stop hunt back into the trend to hit lower level shorts or higher level longs, and again stop out those traders who are chasing the impulsive moves or chasing the trend after it goes so far. I can't stand it anymore, I need to get in, I'm missing out. And even when you know what's happening, they're really good. They're the best at this game. They know how our psychology works, the algorithms, everything is designed on human psychology. The timings, dragging things out over 3-4 hours, getting traders chasing all these false moves. And then like clockwork, bang, 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 hit the stops, trap the market, shift it, and trend it. And all of a sudden you're standing there wondering what happened. So relax, step back. Trade management, self-management, timings are critical. Last night was textbook. Right at 9:30 US time, they moved the market and then they continued the move. But there's always going to be a stop hunt. There's always going to be a high and a low. There's always going to be the timings, the round numbers. Keep it simple, traders. And then review your performance. You're going to make mistakes. Even when you know what you're going to do and you plan on what you're going to do and you go in with a game plan, you're still going to make mistakes. It's just how it is. It's live time. The market is an evolving organism. It's going to change even when it's the same model. There'll be variations in there. Assess your performance in live time. Just deconstruct. How did you perform? How did you manage your emotional state? How did you manage being patient and disciplined? Did you get impatient and impulsive and just get in at any price? Or did you wait patiently and just monitor yourself, observe your behavior, observe the market, relax, execute your trading plan, and then figure out how can you improve? We talked about this yesterday. Just a subtle little tweak. 1%, whether that's every day, every week, every month, it's still an improvement. And if you're aware of those little things, you can change them. You can change all that. You can reprogram yourself. You can change some of those habits. When you're done, you get your 50 pips or your 100 pips or whatever you got, walk away from the screen, take a break. It's so easy sometimes, especially on a day like yesterday, to want to start trading both ways, jumping in the moves, and when you're proficient and consistent at that, absolutely. But on the other hand, if you're scaling up and you've done your work for the day, take a break. You made your profit, you made your pips, walk away, have some fun, go do something different, allow yourself to have some downtime, let your brain declutter, have a workout, have some free time. So again, the objective for me is simple strategy. Consistent, that I can duplicate day in and day out, and then becoming very proficient at your craft, mastering every little nuance. Every time you make a little improvement, you're going to get another little layer of the onion peeled back, because that's how this mastery is a continuous process. Become proficient at it. Duplicate that proficiency. So duplicate the process, but then duplicate your proficiency. That's where we come back to just your routine, your review. You're a professional. You're like a professional athlete. And the great thing about the markets is that it doesn't matter how old you get. Biologically, you're not going to decay from being able to trade the market. You should actually be improving day after day as time goes on, so that you can keep progressing in the direction of constant progress. So become proficient, duplicate that, and then just work on scaling that at your own comfort level in terms of your results dictating that scalability. So if you're focusing on a 1% or 2%, whatever your risk percentage or your risk management thesis is, just scale that up accordingly, reassess your performance, and just focus on duplicating that, because this market is, I saw figures the other day, it's approaching $6 trillion now. $6 trillion. When I started it was $3 trillion. Now it's doubled in size. So theoretically there's no limits to what you can do in this market. Okay, so just to review again, each day we come to the screen, we have yesterday's high, we have yesterday's low. We know that we're going to work within a certain window of time. Some traders have asked me, do you ever trade outside of that? Yes, I do. Okay, so I will look, I meant 1 hour before for a stop hunt, and if it's London, I will look 1 hour after for the trade, because sometimes we'll get 3 pushes that expire at the end of this 3rd hour, and as you know, we can get the extended M pattern or the extended W pattern in that 4th hour in a lot of cases for the reversal trade. If it's 3 pushes up or 3 pushes sideways in a box for a shift and vice versa. But I also will look prior to that hour for the stop hunt, and as you're aware, we will see that sometimes at the end of Asia the market moves early for either the reversal or the stop hunt, and sometimes the best way to look for those trade setups are on the news calendar, because that news calendar sometimes will be the catalyst that the market will shift or make that stop hunt in that early hour. I talked about if the market moves 50 pips and it goes into consolidation at the end of Asia, I will look for a trade setup. That applies for the US session as well, and Asia. Some traders ask me, do I ever trade Asia? I mentioned that I do. Whenever a market moves 50 pips, I will look at that market to see how the consolidation forms, if it's setting up for a trend trade or a reversal. There was a great example yesterday on the pound Aussie. Heading into the market open, the market was trending. The obvious direction it was going was a stop hunt to the previous US session and the previous day's highs. The announcement was the catalyst that completed the move. So I'm not big on getting in front of the news, but if you're in the trade already and you're able to go to break even prior to that move exhausting or completing, then that's something that you can test and monitor on your own. I like to look for opportunities. Each 12 candle window is the same to me. If a market has moved 50 pips and it goes into consolidation, I'm looking for either a sell high setup, a buy low setup, or a trend setup. When it's sideways inside of a 25 pip box, inside of the previous day's highs and lows, I do not like to trade those days. But as we saw yesterday, the sell high setup, if it moves more than 50 pips outside of a previous day's lower high, I will look at that market to see how it's setting up. If it hasn't hit a previous day's level and it has moved more than 50 to 75 pips, I will still look for that opportunity to trade it back to the extreme. I hope that makes sense. So then we have our timings. So we have our 12 candle window, and then we have our high and our low. We have our pattern, our structure. Yesterday we saw the sell high setup for the reversal. So we talked about the type 1, type 2, type 3 M patterns and W patterns. So again, that comes back to our structure and our pattern. And then we have our round numbers. So if I'm looking for, if I have a trade thesis and the market is setting up and I can identify the level, again, I will put a limit order in at the timings once that market is near completion. And then we talked about the hourly rotation, timing in my head. So I'm looking for that 15-minute candle that's going to confirm my entry to place my limit order. And then I'm looking at the clock, and in my head I'm waiting for that last minute, because I know that they can still shift the market. And they will, as that rotates around, often that trade will be in the first or last 15-minute candle of the hour. So we talked about 915. Sometimes that will be the beginning of a 4-hour move with the 1 hour and 15-minute and 1 minute if you're trading at the end of that 15-minute candle for a limit order or best fill price at the numbers after the pattern's been confirmed, controlling my risk, setting my profit target, and letting the trade play out. I've managed my downside. I've got an asymmetrical risk reward. I've executed at the best price possible based on the structure and the pattern and the timings. Now I let the market do what it's going to do. I've controlled all the variables that I can control. I don't change anything. I have a talk, self-observation, breathing, maybe just leave completely, but you do not want to stuff up that trade. Brent Penfold talks about placing the trade in either losing or winning. He doesn't move his stop. Now, that may change on some of his trade setups, but once you've controlled your risk, that's the #1 priority. Then you have peace of mind. You've done everything properly. You've got an asymmetrical profit target. You might have a timing stop in your head. If this trade hasn't moved in 1 hour into profit, then I'm going to cut it, or I'm going to go to break even, or I'm going to exit the trade. If you haven't come back in 15 minutes, now you can move your stop. If it's moved a whole quarter level, whatever that may be, all the things that you need to decide in live time. We're going to review a couple of yesterday's trades. We're going to look back at the last 2 videos about the type 3Ms and the favorite sell high setup. Deconstruct your trades. Understand the same things are going to happen today, next week, and the week after, and ongoing. So just keep focusing on simplicity, consistency, price, time, pattern, risk management, profit targets. Keep it simple, traders. Hopefully you got value from today's video, traders. Again, thank you for all the comments, feedback, emails. Thank you for hitting the like button. If there's special topics that you'd like me to talk about, please let me know. Again, I'm trying to provide as much real-time content in terms of performance-driven activities that you can expect, that you can identify, and will help improve your trading. Have a great trading session, and may the markets go with you.
So we reviewed these same setups in our Simple Forex Trading, my favorite M&W setups, just a few weeks ago. Same setups that we saw yesterday. And we reviewed the rules for this sell high setup in my favorite 50 pip sell high London Forex trading setup. So we're going to see these same setups over and over again, traders. If you haven't saw these 2 videos, take a look at them because they cover a lot of what we just saw yesterday. And let's take a look at those setups now. Just reviewing yesterday's sell-off on type 3M setups and my favorite sell high setup. Again, another example of the market repeating itself. Deja vu. We had the previous day's low. The market on the news, the Aussie unemployment hit the previous day's high on a stop hunt through the high of the day before pulling back, dropping down back inside, and then going into consolidation as we headed into the 12 candle London window, Europe London window. We redraw our highs and our lows. And again, this first candle of the day for me, often I ignore it. As you can see, it's often just the spreads wide and everything. I don't really count this, especially when it's inside of a range, but I'll then redraw my highs and lows. But we look at the type 3 setup. The market was already giving us an example of a stop hunt. It had hit the previous day's high, pin hammer at the end of Asia, 3-hour window, comes back inside of the range, drops down, 1, 2, 3, hitting traders who have shorted the market already before dropping down again in our first hour. So again, stop hunt trap, stop hunt down, hitting the traders who have gone along at the end of the Asian session before dropping down again and giving us our inside bar breakout engulfment for a type 3M setup. Now, again, traders, the first target would initially be a break of the previous day's low, but as we can see, the previous day respected it, broke, false break, reversed off of the round numbers at 81.50, which was the previous day's low from Wednesday. Now, I didn't trade this pair. I traded the pound New Zealand, and we'll go over that next. But the other way to assess this is when you have a high, low, and a breakout. So again, we talk about the 3 things markets do. We talk about structure. Now we've got our 3 peaks, but also this geometrical horizontal line in our peak. We can look for one measured expansion of that, which the market completed. But we'll talk about the stop hunt in a second with the news, the BOE. Or we can measure the session high low geometry for the 2 times expansion, which we have 100, 200% expansion. And again, I talked about when the market gets to numbers, I may trade the number plus the spread as my profit target when I'm on the buy side, meaning that the market may hit the number, but I'll get filled at the number plus the spread, give or take a few pips. If the spreads are widening, I might make that 10 pips. Again, learning that the hard way. You don't want to be greedy. But more importantly, as we headed in towards the BOE, you can see the reverse micro double bottom formation, but also the news is an example of where they will use it as an excuse to stop hunt the market and get existing profitable trades. You'll notice that this pin went only far enough with the spread to stop out traders who may have gone to break even. So again, nobody gets a free lunch. Learn to take a profit. But this is a great example of the sell high setup and using geometry and structure, but also measured moves, 1 bar stop, and again 50, 75 pips or more for profit target. Pound New Zealand, I like this pair better in terms of how it's set up. I just like that the 3 peaks were easier to identify. On both of the Pound Aussie and the Pound New Zealand, one of the things that was a sort of an obvious opportunity was the fact that they had news earlier in the day. The Pound Aussie obviously was a stop hunt to the previous day's high. But on this particular pair, they made traders who decided to enter in after the reversal. They've bought this up high. So some traders would look at this as a 1 bar stop going long for 50 pips, whatever they were looking for, following the momentum. But other traders may have placed their stops below the low of that large candle for whatever reason. But we had our 1 push, 2 push, 3 pushes, and then 1, 2, 3 down and sideways at the numbers. So again, an example of where a limit order at numbers, this is where I like to look for the limit order opportunity at numbers. 3 peaks had already been in place. This last little 1 push, 2 push sideways, 3 pushes with a small pin at the opening candle of the 12 candle window is an opportunity to limit order either near or at the numbers. Again, our thesis, this is a stop on traders that are short inside of that breakout, but also we have a high bull candle that we can look at as our 1 bar stop. So again, we haven't gone into a great depth about that, but there's our highest bull candle. I know some traders will say this is the highest bull candle, but I'm talking about a normal candle. This is in relation to the news with the Aussie unemployment. This is my highest bull candle after my trade thesis has started to take shape and they've broken below it, gone into consolidation, stop hunted traders who were short. My thesis now is that this market should not come back. We have a smaller geometrical structure inside of a larger one. We have another geometrical structure inside of our bigger structure of 3 peaks. So again, we talk about using our bigger measurement as a 100% expansion. In this particular case, I targeted the previous low of the day plus the spread. And again, we had a breakout, consolidation, continuation, pullback, and again, another example of where traders can short bull candles in a down moving market or buy bear candles in an up moving market. And again, another example of where they went sideways into consolidation and reversed the market for the stop hunt back against traders who may have gone to break even, not taking any money off the table, whatever that may be, but learn to take a profit. Critical. One of the hardest lessons I had to learn was to start learning to take money off the table. I would sit in these trades hoping for the measured move and get stopped out with nothing. But also timings, numbers, even with the stop hunt high, drop into the 12 candle window, breakout, pullback, consolidation at the end of the day. Same thing, just a different day. And Pound Canadian, another good example, broke out of the previous day's high before pulling back inside, going into consolidation at the low of the 3-hour Asian high low for our type 3M setup, and it trended through the rest of the session, taking out the previous day's low and doing a measured move down before pulling back into the BOE and continuing that leg down. So again, just simple sell high, broke the previous day's high low. It had my attention. Our high bull candle got engulfed, and traded underneath. They went sideways at the low of the Asia 3-hour window. 2 peaks, consolidation, engulfment, pin hammer on the first candle, engulfment, 50 pips. So hopefully you got some value from that today, traders. Type 3M, sell high setups, 3 peaks. Again, review those other videos. We're going to see these same setups again. This is one of my favorite, easy to identify trade setups. I think I must just be generally bearish in nature, but have a great trading session. Deconstruct your trades, look backwards, figure out how you can trade them better in live time. We're going to see the same setups again. Stay disciplined, stay focused, have a great weekend, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.